Hello everybody and welcome to the midweek market update from Smack the Markets for the 5th of June. Now this week so far has been quite an eventful week with the realization that the next move in interest rates from the US may in fact be lower rather than higher, which has been the long-term perspective for some time. Now that's had quite some ramifications in the value of the US dollar and also the value of stocks globally. So let's take a look at how the markets have fared that we discussed on Monday's newsletter and take a look at what we're looking at throughout the remainder of the week. So if we come and have a look at the NASDAQ first of all, if we take a check here on the daily, on Monday, we were looking for the market to continue its move down to 7,000. So this was the sort of easy move, if you like, that we were looking for. So first stop being 7,000. And then we were looking for a bit of a pause and a continuation underneath 7,000. Underneath 7,000 was our real sort of interest point here, looking at opportunities within this larger trading window. Now, as a turn of events has turned out now, we've had a bounce off 7,000. This is now sort of formed as support. And if the market now continues with the current sort of strengths and weaknesses that we're seeing with this market still pricing in a perception of interest rate cuts, then we could see price rising possibly up in towards the sort of 7,300 as an area, as the next sort of area of potential support, which is likely to become resistance. The trend at the moment here is still firmly to the short side on these higher timeframes for these markets. So I'm not looking at change in tact from a swing perspective to the long side just yet, but more looking at intraday opportunities. If we come down to the 4-hour time frame here, you can see a bit more where price's sort of structure is sitting. So at the moment, the market's sort of sitting around that 7,200 level. That area has been previous support and resistance on the lower timeframes before. If we get some continued momentum here, then that next window there is up to that sort of 7,300. So there'll be some nice sort of distance there for opportunities. I think once the market gets to these sort of levels, they're sort of key decision points and key potential turning points. Not to forget, of course, that we have more Fed speakers today, and of course we have big news with the NFP results later this week as well. And all those major events are potential news, market-moving news events. So let's come and have a look at how silver has fared. So if we recall from Monday, what we were looking for was higher prices here above the 14 sort of 57 level. Now the market has taken out that level quite nicely now. We still continue to see a very bullish action as money has been flowing into safe haven assets, namely sort of gold and silver. Silver here being our preferred one because the chart structure was more tradable on these sort of lower time frames. Now, if we take a look at where silver is at the moment, it's had a very good move. And if the same themes continue, then we might sort of see a continuation up here towards this sort of like $15 level. I've got a level marked in here on the daily chart around sort of 15.10, which is sort of previous support and resistance, as you can see. But if we take a look at this on the 4-hour chart, you can see on the 4-hour that we've got a well-structured trend in place now, and we've got another level, sort of structure level here around that sort of $15 level. So that 15.10 was kind of sitting just sort of up here towards these highs, but I think we've got another sort of level just underneath there, and 15 of course being quite a big round number for this market. So still plenty of distance to go, so we'll still be looking at opportunities long on precious metals as long as the current trend structures stay intact. Now on Monday we were looking at dollar yen for a move down to 108, and then we were looking for opportunities below 108 if that trend continued. The main reason for this, if we come to the weekly chart, is that below 108 here, we've got a very sort of big trading window down towards that sort of 106 area. So nice sort of structure to look for short moves. And 108 is the significant level that's been tested multiple times, as we can see. So what's actually happened is we got the move early on Monday down to 108. The market sort of tested that level. And since then, of course, with the sort of weakening of the US dollar, we've seen now that we've got a bit of a bounce sort of forming here. So from a technical perspective, the trend is still short. It doesn't really look like there's been an awful lot of a pullback. And if we take a look at this on the 4-hour chart, we can see that the market is just really sort of consolidating around that sort of just above that 108 level. So we'll still be looking for opportunities underneath 108 once the market sort of gets there. But I'd prefer to see price underneath that level before sort of looking for new opportunities, new positions at this moment in time. Now, if the current sort of themes continue with the US dollar continuing to weaken, and for that we'll need to see the dollar break through that sort of key 97 level. Once that breaks through that, and if it breaks through that, I should say, then that means that the dollar itself is into a new phase to the short side. And if that continues to weaken underneath that level, we're going to see continuations of some of these other markets that are benefiting from a weaker dollar. Now, one of these markets that's been really benefiting from it is the euro. So if we take a look at the euro here, from a daily time frame perspective, we can see that the euro's had a very, very good week here so far. It's really sort of bucked the trend here on the on these higher time frames, and at the moment it's just sitting up here at 112,700. 112,700 been a significant level on this market, as we can see, but again, at the moment, there doesn't seem to be an awful lot of reason for this market, for these sort of strengths and weaknesses to change at this moment in time. So providing that stays intact, we've got that very key level here, very important psychological level for euro dollar being 113. And that's only, that's not very far away from where we are at the moment. So a break above 112.70, I think the next sort of port of call here will be that 113, and we'll certainly be looking for that sort of move as the sort of easy move into the sort of second half of this week. Of course, once it gets up to these sort of levels, then you know that they are sort of key decision point areas where we let the market decide what it's going to do from there. And of course, we need to evaluate the news announcements that we have on the US dollar sort of coming out throughout the remainder of the week. So there's a few things there that we are, a few opportunities that we're keeping a close eye on in the trading room this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.